The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. Pleasure to be here on this 21st day of July. And what we're looking at here, and thank you to our hosts for the previous hours, what we're looking here is a Dow at 18,580. It's down 15. S&P is unchanged at 2173. Not bad. And the composite index is up 3.5 at 5,093. What's very interesting here is that while I've got a sell, you remember we were speaking about this for a little while, while I have a sell mode in gold daily, I haven't yet got anything on the weekly chart. The gold trading right now at 1330, up 3.5. Silver's trading down 7 cents at 1954. We're going to be watching this really closely because within the context of how you rotate, not you, the market, how the market rotates through any consolidation on its way to higher highs is going to be really important. I hope I can remember to talk about that in a moment, but I just want to finish these up. We're looking at, look at this. Well, I'll show it to you. So gold right now, you see there's the peak E in a double top in the daily chart, pulls back, in legs, C to the downside. Stochastics at 24%. MACD is still negative. So I'm suspecting that there's still more to go. But you remember what I've been discussing? I said, I'm not sure if this is really a time where even though I've got a sell signal on gold and I think the dollar wants to move higher, I actually want to short gold. Now, if you got in perfectly just near the top, obviously you're doing very nicely. You don't have to worry about that. But gold has a way of popping up when you least expect it. And look at this. You can have pretty serious moves to the upside. For a long time, those were moves to the downside. Now we're seeing the surprises to the upside. So that's the only thing. That's my contention, is that we're looking at a situation where gold is digesting huge gains. The gold stocks are digesting massive gains. Some of them were up 50, 60%. Others were up even 200%. I mean, that is remarkable. Of course, coming off a low, when you're in the 1s, 2s, 3s, and 4s, it's easy enough to have a very big percentage move. If you look at the monthly chart, some of them were trading in their 30s, 40s, and 50s, and then went down to single digits. This is not a big deal, but it's a big deal if you got in on time. So let me just look at this, and I wanted to show you something within the context of the markets. As we're looking at things like crude oil trading down 26. Now it's in leg D to the downside. Possible peak D today, but that weekly chart is the one that I said I don't see it on a percentage basis. Maybe it'll be a big move going from the 54s down to the 45s or 43s, even big percent. But in the actual chart from the bottom, this is just like a 1/3 to a 50% retracement. So in that context, what I'm looking at, let me just move this away for the moment. In that context, what I'm saying is that crude oil still looks like it's not the place to be in this phase of the market. You could have certain stocks, maybe the oil service stocks are bouncing nicely. OIH, yeah, it's okay. It had a great move up, but now it's consolidating. All right, so let's go on. We're going to look at bonds. Bonds right now are trading at 170 and 30 seconds, down 27, 30 seconds. In leg C to the downside, just like the other commodities, just like the bonds that we're looking at. Made a peak D in the weekly chart. I think that we've got ourselves at least some kind of a consolidation here. I don't think, really hard to say. My impression is that this isn't the top in bonds. This isn't the bottom in interest rates. I think that the massive super tanker structure cannot just turn on a dime. Dollar. Let's see, turn on a dime. Dollar. Oh, I typed it in there. Pity. It would have been very nice to go from the one segue. All right. So we're looking at the chance that this is a G/C. I suspect we're still going to make a D. And when we get to this area here, in the 178s, 181 area, that is where we've got to start saying, okay, at what point will deflation I'm thinking kind of a deflation. It's a very sophisticated deflation because it's only in select areas. Will that impact the markets in such a way that the Fed is forced to produce something, and whatever it is, it turns out to be some inflationary move to the upside? I think that's still a way to go, but that's my thinking. Some kind of a deflationary aspect goes towards an inflationary aspect. Now let's look at the dollar. So the TLT could come down towards the 168. I wouldn't be surprised if at some point it's going to test the 166 area, the low that was made in June. If you want to look at the inverse, the TBT is trading up a little bit. It's up 33 cents to 32.04. Started to exceed to the upside. We do have a position in the TBT, which is the ultra short Lehman 20-year T-bond fund, short fund. And what we're looking at here in terms of the dollar, DXY, dollar is working hard to try to get to that leg D. It's so interesting because we have a coincidental movement now. It's happened periodically. I would not put in a claim to say that there's a direct relationship between a rising dollar and the stock market. But I would say that there are times, often enough times, where we get some kind of relationship, and this is the one where the Dow is in. I should have done that before. The Dow is in leg C, possibly making a peak C if there's no new high above 18,622.01 today. The S&P, SPX.X, the S&P is in leg C, possibly a peak C if there's no new high above. I think there will be today, above 2175.63. That'll extend C in both cases. And it matches very much the wave count in the dollar. So the dollar to me is saying, don't ignore the fact that we've got a very strong move off the bottom, but we haven't gone strong enough into the 90. I haven't gone above that peak of the week of the 4th of March at 98.58 to say, now we've got this pattern that you've been speaking about, mister, for months and months, and that is the U that goes into a double U formation, like a W. Took me a long time to figure out that a W was actually two U's put together at some point. Okay, so we've got that pattern, and that's a formidable pattern because what is it? If I had to invert this, I wonder if I could do that right now. I'm not going to waste time. I'll try to do it during the break. If I had to invert it, you would get the Chapman wave lowercase h that goes to a lowercase m formation. And that can continue for a while until it pierces decisively and then closes. In this case, it would have to be up, not down, above the high of 100.51. So, okay. Now let's just go on. We're talking about very interesting aspect here. We want to look at a question I got was the EUO. And the EUO is the ProShares ultra short euro dollar. Is that the euro dollar? Let me just see. I can't see because it's been cut off. Yeah, ultra short euro. And what we're looking at here, I wonder if I can do it this way, EUR USD. No, exact opposite. So that's the inversion that I want to look at. You know what? I'll do that in the break, and I'll do the, what was I going to do? I was going to invert the dollar. I'll be back straight off this very important message. Dow's down 15, S&P's up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We are back, and we've got down 17 S&P unched. Here we go. These are the Pro Shares Ultra Short Euro, which represents very much the pattern that we're looking at in the dollar. It hasn't made as much of a move. It did not go to a new recovery high in November, the high above 28.58, which was made in March of 2015. November, it failed to get there, but it has made a higher low and is making another cup formation. However, this is the pattern that I was talking about. I inverted it. This is the dollar monthly chart, and now it's upside down. Let me do this. Sorry, let me put them in juxtaposition here. So let me go to, here we go, dollar DXY. Okay, there we go. So there's the dollar. You see that pattern with the U? Here's the same thing when it's inverted. And when it's inverted, let me move it to the side. Let me make this a little bit squashier. There you go. Okay, so now what we're looking at is that lowercase h goes to a lowercase m formation, and it's the opposite, the inverted. This is the mirror image of what you're looking at here in the monthly chart. It's upside down and roundabout. So that pattern could go on for a while, and it can come back. At this point, it does look like it wants to come back and go down towards the low, which was a slightly lower low than the left side. And that's going to dictate a lot. I would even say if the dollar goes 1 penny above the 100.51 high of, was that December? Of December of 2015, then you've got yourself a real good chance that you can say, wow, what happens next is going to be absolutely imperative to watch, because every other time the dollar is just snuck to the, well, not the last time, it just snuck above the previous high and then pulled back very sharply. So that's that. And the euro, I think, is that euro dollar. No, so the euro pro shares, the inverted. Let me just go there. Where did it go? Chart. There it is. So this is it. Let me just move this away. And now let me go to the EUR. No, the EUO. The EUO. There it goes. And that's, again, that's the pro share. So that means that the euro EUR USD is probably, did I have to go to the dollar? I didn't even have to go to the dollar. All I had to do was the monthly chart of the euro dollar currency pair, because there it is. And the euro looks like it should slip a little bit more. All right. Whoa, we got that out the way. Okay, Scott, I'm sorry you dropped. I did not see you. I was so busy with these inverted charts. You want to look at AA, and Alcoa is trading right now up 11 cents at 1072. It's made a peak D. I think it's in the chop area. I suspect it's going to have one little pop to the upside over the next 2 days or so. And then you've got to be somewhat careful because it's made a very quick ABCD. Actually, this is a chart. If I had to talk charts and say that patterns that, as I say, I don't remember names and faces all that well, but I do remember chart patterns as if it's embedded in my mind. I don't ever recall seeing this particular pattern right here on a weekly chart. I've seen something close, but never quite like this. You see the cup formation that's formed in Alcoa in the weekly chart? Now, I made up the left side, right side lip. There is no lip. It just came straight down. So I used that point right there, the high of the week of the 9th of October at 11.18. It did drop almost 40%, more than 40% to 6.14. Then it ran back and it made a new recovery high at 11.50. So there should be a D. But look what happened here. And what I'm saying is, I've seen this pattern, umpteen times. But I've never seen, I just don't even recall getting close to an inside, a sharp move down from a peak C in this cup formation, and they're not immediately trying for a D, but instead pulling back and then having what I call a chap wave inside buy mode that goes from a trough A to a peak A, peak B, peak C, and then a peak D that doesn't even come close to the high of 11.50 made in the week of the 29th of April. My thinking here is that Alcoa, there's something positive that is going on. It's going to be reflected when Alcoa finally gets to 12.20. And if you're looking at more intermediate term, and I think, Scott, that's kind of what you've been talking about, I would suggest that if you have got into Alcoa anywhere below 10.50 or 10.30, that's a position you might want to try to hold. And if you can hold it, you might be rewarded, even though it's one of those positions that I would say, if it's small position, you've got to be prepared that it could even drop below your entry point. It could go back one more time into the nines. But my thinking is that Alcoa is going to go to 12.30 to 12.55 in 2016. That doesn't sound like much, but on a percentage basis for a stock that's absolutely struggled for a year to get back. The last time it was at that level was back in June of 2015. So for a year it's struggled. And I think it will finally do that. Okay, I hope that helped you. Now, there are a couple of things I want to do. I want to treat this a little bit like some kind of the Friday show, because I will not be here tomorrow. So let's just do these, do a couple of things here. And I'm just going to do this, if you don't mind, give me 1 second. Okay, what we're looking at here is a situation where within the selection of sector movement and stocks within the sector, and that's the most important thing I could say. There are certain sectors where not all the stocks are participating. A couple of the stocks are doing beautifully within a sector and kind of leading everything. And what I'm looking at here, which I think is absolutely a critical part of your own analysis, is that if you're in stocks that are working well in this environment, try to stay with them as long as possible. And if you've been in the stock and it's already done very well and you were stopped out, because the other thing I also wanted to mention, and I almost forgot, thank goodness I remembered, is that within the context, if you've identified a stock that is, whether it's culturally, whether it's sectorial, whether it's geographic, I don't care, whatever your bias, if it's fundamentally, if it's chart-wise, whatever your bias is, your predilection, your best technique, whatever that says, try to stay with the stock as long as possible. Because we've been stopped out of really good stocks, and it's been a little difficult to, sometimes we manage to get back in, but sometimes it's real difficult. Just say goodbye, that's it, I have to wait. And it's real tough to do, especially when you got in at a really good price. So, and you got a nice gain, you don't really want to give the gain up because you're getting in at a high and it could pull back, and but if you've identified something, even with the tremendous whippiness that we've seen, some stocks have actually pulled back between 5 and 8% in a day and then close at the day's high. That makes it really tough Yeah, even if you're doing an investor's business daily rule of 8%, you could get wiped out there just wanting to stay in, and then poof, it hits your stop, and then it moves up. So try to keep your bias towards the long side if you're long. On the short side, there are some stocks that are working on the short side, but my bias going into early next week is still to remain on the long side. And next week I'm almost sure that we'll start looking at the short side. So I wanted to get that out just off my mind, because those are the things that, as traders, as people who put positions on, it's nice to glean a little bit of information of people that have been in this business for a long time and have identified that within a trend, there's a characteristic that's going on now that is really making it difficult, especially even for fund managers, where you're in correctly, and then you do want to have some kind of a stop. Most fund managers just want to keep buying on dips, but sometimes the dip is a little more than you want. But if your bias is that this thing is going up, you've got to try to stay in that direction. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I had an email about Chesapeake Energy trading at $5.13, up 39 cents, up 8%. It was actually all the way up to $5.25. And basically, a person's in, wants to know where the support is. I would say that 480, the 200 period simple moving average, this is in leg D. You've got to expect a little bit of a pullback, but the MACD is very strong, and the stochastics at 80%. I like it. The weekly chart has just started leg C. Now the monthly chart is the one that makes me a little worried. What I'm going to suggest is, if it's a more intermediate term position, it really does have to hold 480 on any pullback over the next 3 to 5 sessions. If this is just a trade, leg D, market's getting a little toppy here. I would not be surprised if we're getting real close within another few days of some kind of at least a decent pullback. So I'm going to say Chesapeake in the energy area might be separated from all this other stuff. It looks like it is right now. There must be a story. It might have been news related, spiked with an upside gap. I would suggest that if you're able to take a little bit off, take something off now, just to say, I'm in leg D, that's where I've got to be a little bit cautious. Had a fabulous move. I'm going to take a little bit off, try to keep the core position. Now, if you're in under 470, I think maybe 460. If you're in under 460, try to hold that as a core position. See if you can add to it on a pullback to between $5.01 and $4.93. Maybe put back what you take off now. It doesn't sound like much, but believe me, 14 cents in a $5 stock is a big deal. So, and then you will see, because it should hold that and then start to move immediately for a new recovery high. Now, it's an alternate counter, went to peak A, peak B, and then failed and then pulled back sharply, made an inside A, B, C, D. So that's the way I'm looking at it so far. Good. I'd like you to try to keep it as a core. Means that you might give up a chunk of profits. So at least take something off now to reward yourself, and then say, okay, Chesapeake, CHK, tell me what you're going to do next, because I'm ready for anything. That's the way to do it. And let it surprise you. Even if it goes up after taking a little bit, that's great. And it's better to keep going up with a pretty good position than to be stuck with a tiny position and then not be able to get back in. All right. So now I want you to do a couple of things. I want to do this questions about the XAL. Let me get to that. XAL, that's the Arcus airline index. Trading at made a peak B, it's pulled back. Let me just double check. 6.5. Okay, made a peak C, and it's got a long way to go to get to a D. I think it will try to get to the D. Trading at 88.48 down to $1.16. What's really important about this on the monthly, I'm going to jump to the monthly now rather than the weekly. The monthly says that if the ARCA index is able to, let me just do this, I'm going to be as critical as I can. I'm going to use that, and then I'm going to put in another one right here, trendline the monthly, and this one I'm going to make it dashed so that you know exactly what I'm looking at. Okay, if at 88.49, if the XAL is able, that's the airline index, is able to push into it's at 88.50, so it needs to get above the candle high of 91.43. In the next 2 weeks, going into the second week of August, not the first, but into the second week of August, if this is able to somehow get into the 93 to the 95 area, that'll be the first time in a while that the airline index, I think, is going to help the transports in such a way that the transportation average in the weekly needs, it's 141.80 right now, down to $1.16. It needs a nice close over 146.07, the high of the 22nd of a week of the 22nd of April, to get to start a leg D. That leg D will then be a leg B in the monthly chart, and that'll be a breakout. And if that's together with the XAL, fabulous. That's fabulous action. Okay. And the major support is if the IYT, trading at the transportation iShares, if they trade from 141.80, they slide underneath 138 over the next 3-4 days, that's going to say, hey, watch out. The market is getting readier to have a sharper pullback. JetBlue, I'm just going to do that right now. I don't want to jump around. I want to go to specifically. JetBlue looks the same thing. And the weekly chart is not anywhere as good. JetBlue at 17.75. It better hold 17, otherwise it's going to go down quite a bit more. If it's able to jump into the 1820s by Tuesday of next week, I'd say great. That's the first time in a while that it's had follow through to the nice upside leg that it had starting in the end of June. Okay, let me do this. United Rental is URI. Is that right? United Rental. Yeah, this is a big spike. ABC. This, in fact, is a gap up to a leg D. I always say just be a little careful because they sometimes have to digest when you gap up to D, E, and F, especially if it's a Friday. This is a Thursday, so it's not the same. I like it. All I can say is telling us a good thing about the markets, and that takes me. So United Rental is acting well, but it's not great. The monthly chart is at about 80. It's at 77. it needs to get into the 81 to 83 area, and it needs to do that within 2 weeks without, I'm looking at URI, I'm sorry. URI needs to do that, and that will be a really strong positive for the stock, as opposed to CTAS, which had that huge spike yesterday. It's trading at 107.18. It's just massively taken out the monthly resistance line. This is a good sign. This is why I'm saying I think that something's going on in the economy that is a lot better, certainly a lot better than politicians are going to talk about. Even the Democrats are not talking about the right things. I believe that they've missed out. They should be talking about growth in certain areas and just keep emphasizing that. And I said I'd talk politics. I'm not interested in talking politics. I got so much to say. It'll take a whole show. But what I would say is that Trump should keep talking about the economy, because that's what people's perception is, that it's not that good. And certainly we haven't had the job growth we should have. And the Democrats should be pointing fingers at certain areas and saying, look how good this is, look at this. The stock market is at all-time highs. There's nothing wrong in saying the stock market is at all-time highs, because there are hundreds and hundreds of thousands, if not millions of people who have benefited from this mega bull market. And just keep it as simple as possible. So Cintas, CTAS trading at 107.16. Overalls, clothing, rentals, it's telling me there's something going on that's been very good up until this point. All right, got that out the way. Now let's do a couple of things. I didn't show, I think I did show the E-mini. The E-mini is just stuck. It made a peak D in this arch formation. It's trapped. It's just broken key support levels. I think that this is, as I said to subscribers to my opening call, we've got some stocks that even now with the market pulling back are just holding beautifully. But at the same time, I'm going to say to you, I'm a little cautious because I think we're coming into a period where we should have some kind of a digestive move. And I'm a little worried about some of our longs because it's going to be a pity to give up these really nice gains. And at the same time, it's going to be a pity if they don't pull back and they hold and you're out of it and you have to try to get back in at higher prices. That's a tough thing to do. But I've got a plan. I have a plan. Okay. Now, yes, I was asked by a number of people if I would start talking about the mega bull market and what I'm looking for. I'm going to do that in August. I'll have another webinar sometime in August, and I've already started preparing for it. It's actually prepared itself because we went to all-time highs in the Dow and the S&P. So the webinars that I've had since the beginning of last year, talking about what happens if the Dow and the S&P make all-time highs, what happens if or when, and we've done that. I can now do the when. I can look out, and I can now start anticipating timing for 2016 into 2017. That's really nice. Hey, I'll be back. Dow's down 39, S&P's just down 2.5. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and we're looking at the Dow now down 52, and the S&P's down 4. So the selling is, wow, we're 1 peak away from looking at that D. Now, what happens if you are looking at the markets? Let me go through this. I'm going to go one at a time now. We're going to do this right up until the end of the day, end of my show, that is. Here we go. The weekly chart of the TYX, the 30-year, is in a very strong leg A to the upside. We've seen that before. So what happens from this area on is going to be really important. Number 1. Number 2 is within the context of markets, what we're looking at is that's the 30-year teen bond yield, the white bars that you're looking at, the goldy brown ones. This is, and that's trading at 23.13 with the low that was, did I not type that low in? I guess I didn't. I'll type it in now. The low is 21.02. Oh, I spoke about it, but I was waiting for the next week. Okay, 21.02, 21.02, 2.01. Can you believe it? 2.101 for a yield. Fantastic. All right. The 10-year T note is trading at 15.80. This is a strong leg A. And if you remember, I said in the weekly chart, unless I'm wrong, and I've done a very poor thing with the count in Elliott wave, based on the Chapman wave methodology, we were in leg E with a trough E formed. My thinking was that in Elliott wave, we had gone 1, 2, 3, 4, and we were in 5. 5 is the way you can expect some kind of a turnaround and a different chart pattern to unfold. And that's what I think we've got. One of the reasons why we went long yields, even though I've been talking about the Japanization of our bond yields just forever. And I don't think it's just going to change on a dime like this. I think this is just another prelude to a sharper move down. Why? Because it's going to be the relationship of certain sectors of the economy that keep being harped about and that the Fed is watching, and they're not going to be satisfied for quite a while. That's my thinking. We'll see what happens. All right. Now we've got the 10-year in the same situation and the 5-year having gone to lower lows. And that's going to be really important. How does this evolve? What happens after that? And this is a weekly chart. The weekly chart says at 23.09, there's a chance that you could test this candle here where you can go into the 25s, 24.80 to 25.20. That's going to be key. You start to break above in yields, in the 30-year yield above 25.59. I have to say to you, I'm going to have to do a lot of thinking. And then we're going to see what happens to the market, what happens to real estate, etc. If I go to the iShares of the Global Timber and Forestry ETF, Wood, made a peak D at a very nice pullback and a great V-shaped recovery, but has not taken out the high that was made at 49.30 the week of the 10th of June. This is part of the construction area, etc., that I think is so important to monitor. And if you look at the HGX, which is the Philadelphia housing sector, that has gone to a leg D. That's what you want to see. Very often these arch formations come down and then they pull back and they hold key support levels like this did. The HGX, when it came down in July 1st, turns around, boom. And now we're at new recovery highs. 252.20 is the high that has to be taken out. That's where I think you can get a lot of resistance. That's why I'm saying I think we're getting closer and closer and closer to where it's going to be very difficult for the markets to go all that much higher without a very strong, it doesn't have to be price, but it needs time. You just need either price or time, but you've got to have a pullback to regenerate energy for the upside. If I show you the monthly South African chart, look at that nice leg B in the monthly chart, having held that beautiful uptrend line. This is the Dow Jones South Africa Stock Index, and I think it's in dollars. So this is an A and that's a B. So far I believe that the industrials has just a portion, just a small portion in the commodity area, in gold. That's what I should say. So this is a very interesting chart. Now, if I go to other areas, look at this. If I go to the IBB, it is still. Oh, I made a mistake. Okay, over here. IBB. The IBB, that is the iShares Nasdaq Biotech ETF, made a gap up leg C today and is pulling back. And my contention has been in the 282 to 284-ish area. We've got to start looking at a potential for another move to the downside. I missed this one completely to the downside and to the upside. We had traded it for 111 plus 30 for about 140 points from that from the July high at 400. About 2 days after the high was made, we went short and we recovered, and we went back in and covered all that. We've had the 2 times long and 2 times short, but there's just a slight gain with all that in and out stuff. I can't really count that. Okay, so now this is going to be very important. I need to do this because I want to go through as thoroughly as I can what I'm looking for next week. I wish I had time now to talk about the politics of it, but all I can say is that I don't think that maybe they do. I don't think that the Trump campaign has even a clue as to what's coming up. If history is our guide when it comes to the Clintons. And I don't think that the Clintons have a clue, or Hillary Clinton has a clue of what's coming up. Maybe she has a clue because of Trump's style. So this, if you play sport, this is going to be fantastic. Unfortunately, this is the politics of the country. So we're going to be looking at something that is really quite fascinating. I have my opinions, but I'm not going to use opinions. I like to talk about the politics of politics. And the only thing I want to say right now is over a year ago, no, it's exactly a year ago, I'd said that my belief was that it would be Trump versus Clinton. And at the time I said, my bias is to say that Trump could win after 4 years of a Democrat Party, that the Republicans could come in. But I have a whole other gamut of ideas that I've been speaking about. I've spoken about in my webinars. I'll do it in the next webinar that I do. And the most important thing about it is to say, I've got to look at the culture of the country. It's not, remember, I always consider that the president is merely the little triangle at the top of a huge pyramid, and that person represents the people's will, the majority of the people. Sometimes it doesn't feel that way, but that's the way it works, right? And in this particular instance, there is a cultural change that's going on that a lot of people don't even see. They don't even understand it. And it's the timing of it. Is this the time for it? That's number one. Number two is, I put this in the category of three terms of Republicans, even though the Republican Party was a little bit different then, of the 1920s going to the top until you got Hoover. And of course, the crash happened just 9 months after he got into office, 8 months after he got into office. And then he was stuck for 3 years trying to get out of it. And my contention is that there's another thing I've got to be thinking about. Could it be Democrats for 3 terms? And then up, there goes the buzzer. That's to cut me off. And then we get a major top in the markets. So I'm going to be just talking about that. I'm going to be working hard at that over my vacation. I'm going to be putting together a thesis on what I'm looking at. Now that that's done, now let's look at the numbers. As we're going into the break, I'm going to put up the VIX index, and this is going to be your clue, folks. The VIX index is at 12.26, up 49 cents, up 4.33. I'm going to talk about that as to what to look for next week. I'll be right back after these messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So let me do a couple of things here. Actually, let me just do this. These are good questions, so I'm just going to deal with them right now. Goldman Sachs. GS. Goldman Sachs right now is at peak C, and it's had quite a bit of a pullback down at $1.73 at 160. I think there's going to be just enough strength for it to try for the for leg D at 164.10. After that, you've got to be a little bit careful. So there's enough strength, and because it's underneath the previous peak in the weekly chart, having formed that H pattern in the rally, it doesn't have to get to the D. Remember, that's what I call the retracement failure mode. But the MACD and stochastic are really good. So whatever's making the market weak right now, I think it's transitory. There'll be just enough energy going into the weekend, maybe to go a little higher either tomorrow or Monday. And then I think you've got to be really careful. Okay, so that's Goldman Sachs. I'll do the XLF because it's part of what I want to talk about. XLF is really struggling, but it's at 23.54, down 11 cents. If by Wednesday of next week it cracks under 23.20, that's really not a good sign. It's just not a good sign. 2309 is the 9-period moving average support. XLF, the financial ETF, S&P, it needs to get above 2380 to start a leg C. It actually needs to get above 2393 to start a leg D in the weekly, and it's really struggled to do that. Okay, now let me go back to this. The VIX index, I spend a lot of time on the VIX index. I have numbers to look at every single day. My opening call right here. Let me show you. I give you the what to watch for section right there. Let me show you what I do. Oops, wrong one. Right there. Okay. This is my opening calls. The second chart that goes out every day. The first is the Dow chart. This one here, right here. I give all the parameters. I said the upside today could be limited both upside and downside unless the VIX volatility index rallies into the high 12s from the 11s, which is what we've got right now. It's at not the high, it's already at 1238. So we've got the pullback. So I discuss and I show you what to look for. And then the next one is the overview section. And here I even show you over 1230s market slips. What's the VIX at right now? 1238. Under 1170s market rallies. So I give you all that information, and I give you the charts. This is the Dow 120-minute chart. This is the VIX 120-minute chart. This is the Richard Arms Trin Index, and this is the bar chart of the Dow and the S&P daily charts. So and then I give you all the different charts, and I show you the different parameters, etc. Now let's get back to the nitty-gritties. 1238. If the index starts to pull back today under 12, you'll get a rebound. So the Dow closes just down about 30 points or so, S&P maybe down 2, and then allows tomorrow to have the chance of a push to the upside. I'm thinking by Monday, maybe the latest Tuesday. Here we go. No, let me finish the VIX. So the VIX at any point next week, if you see it start trading comfortably in the 13s, what I mean by comfortably, I mean it's in the 13 and it refuses to go under 12, and the market constantly makes lower highs and lower lows. And I'll give you numbers right now. I am anticipating, it just seems hard to do, but I think it'll do it somehow or other, that there will be a leg D. And that's where it doesn't guarantee, it just says that that's the point where you've got to be careful and start anticipating that there could be a deeper move to the downside. All right, it means that if you're long, you raise your stops. You can take profits if you're a swing trader. All right, so those are the parameters to look at, and I'll give you what I'm looking at. Very strong, 18,650s to 18,690s, maybe just a touch of 18,700 or something. And then I think you've got to be careful on the Dow. Support is absolutely critical at 18,420 to 18,300. That's just all through next week. Watch that closely. So those are parameters. I don't think I need to give you much more, and I won't be able to because you're about to go for your swimming lesson. And, of course, great shows all the way through the day. So I'll be away for the week. And I will be updating my newsletter almost I'll try to do it every day like I always do when I'm away. Have a wonderful week and wonderful trading, and I will be back soon enough.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,